Hello and welcome you tuned into Your Trades with me, Ankita Saxena, and with me is Mansi Dave. And in the next half an hour, we'll take you through how the market's shaped up for this week. It's Friday, but I can't really say, Mansi, thank God it's Friday because the market has not ended on a good news, on a good note. In fact, we are below 24,600 levels also, but it was a heavy week. Whether it was the tariff announcement or the rates remaining steady at the on the US Wall Street, a lot of news flow that really shaped up the market this week.
Actually, it was a challenging week, and if we see Trump's tariff announcement did keep the markets jittery throughout the entire week. And if we have a look at the week's performance for the market, Nifty did decline for the fifth consecutive week, mainly dragged by Adani Enterprises, Kotak Mahindra Bank. Now, there were a lot of spaces which were not performing in trade, and it was the FMCG bucket which was helping the market throughout the week. We did see that the consumption theme was playing really hard, and that was the only sector which was really performing and helping the market in all the volatile scenarios. The week gone by, the Nifty did end by 24,600 and even below that, and yes, that same week, this was the same week where we did see 4,900 levels and above. But then, yes, the last trading session of the day was quite challenging. We saw a lot of volatility, and this volatility was ought to happen because of the global shifts and the global announcements which were coming from tariff front. Again, if we have a look at the Nifty 50 in particular, it registered biggest weekly losing streak in 2025. Yes, it was this week when the Nifty did witness the biggest losing streak. The mid cap and small cap did decline for the second consecutive week. Now, keep an eye on small cap space because it is declining since quite a few sessions now, and it was a consecutive second week where the small cap index was not performing. FMCG was helping the market. On the flip side, if you see, real estate sector was the top sectoral loser, and this is the second consecutive week for the real estate sector as well, where Godrej Properties, larger players like DLF and Brigade Enterprises were not performing in trade, and the Nifty Realty Index did tank down during the entire week. Nifty Metal Index also did see signs of volatility and was down during the entire week, so no shines seen in metal space as well. All in all, sector-wise, it was quite challenging, a tricky market. There were a lot of news flows which were doing the rounds in the markets, on the back of which we did see all of these levels. Earnings season, yes, we have started seeing good earnings coming in, but that too was not helping the market to that extent. We have our market experts joining to help us understand how should we decode this market and what should be the strategy for the coming week. Rajesh Palavia is joining with us, and we also have Sunil Subramaniam. Gentlemen, good afternoon. Thank you so much for giving your time to ET Now. Rajesh, I'll start with you. Yes, there were a lot of uncertainties while we started the week, but at the end of the week, we have some clarity. But with the clarity, we still have the volatility in the market. What should be the strategy for the week next?
So good afternoon, Mansi. Good afternoon, everyone. So looking at the supply pressure throughout the week, Nifty and Bank Nifty now both are trading below to 50-day moving average, and kind of uncertainty towards this tariff has, created some nervousness in the market, and we have seen most of the sector have witnessed supply pressure. So now Nifty and Bank Nifty both are now trading below to their important support area. We have broken this 24,600 support area on a closing basis for Nifty also. So I think if we continues to trade below 24,600 for coming week, so I think we may see furthermore, unwinding pressure in the market, and possible down move can extend towards 100-day moving average support area, which is placed at around 24,380 kind of zone. So I think that's the next level where Nifty can correct further from the current level. On the higher side, until the Nifty not manages to cross about 24,750, 24,800 level, I think trend is likely to exhibit on the bearish side for near-term perspective. Even for the Bank Nifty, 56,000 is the crucial resistance area on the higher side. So if at all we need to have some comfort zone in the Bank Nifty, it has to cross 56,000 level on a closing basis. Then only we may see some short covering action till we are not able to regain above 56,000. Maybe some more supply pressure we could see in Bank Nifty also. 55,500 is the immediate put base support area. I think if it's break, then possible down move can extend towards 55,200 also. Even on the rollover activity also, we have seen that Nifty has witnessed around 75.7% rollover, which is lower than last 3 month and 6 month average. So I think shorts are still carried in the system for the Nifty as well as for the Bank Nifty. So which may create further more pressure in next couple of days. So it's going to be slightly bearish opening for the next also, which we see based on the technical as well as the derivative setup.
All right, Rajesh. Hi, this is good afternoon. This is Ankita also joining in. Mr. Subramaniam, let me come to you then. In this market, what has really held the fort is the FMCG pack. In fact, the sentiment was also buoyed by the results that are coming out, whether it's HUL, a good outlook also. We do see a volume pickup happening as well there. So the entire FMCG pack, also because it's domestic facing, is that going to be the theme going ahead? Because tariff has caused a lot of trepidation in the market in any case. So does FMCG consumption, does that look like a safe haven?
See, right now, yes, because I think in the weeks before, FMCG has not been performing. So from a relative value perspective, being a pure domestic kind of sector. Second is that, no, you saw that the commodity prices are generally easing. So FMCG is a huge consumer of commodities. So the expected thing is that sales volume will pick up, but the margins should also shore up. Third is, of course, the overall monsoon. You're seeing the effect of the monsoon even on two-wheeler sales. So I think that monsoon definitely has a positive impact on the bottom of the pyramid customer, right, in the rural areas. And FMCG, as you know, is largely also driven by the rural-oriented sales. So the positive outlook for the rural economy, I think, is translating into the FMCG pack. And the reason that it's holding fort here, though other consumption-related sectors like realty and auto under pressure, is because it wasn't performing in the weeks before. So there is a kind of catch-up rally happening there. But looking forward, I think that since or entire consumption pack, whether you take it as consumer durables, you take it as auto, you take it as realty, or you take high-end retail, I think all of these are insulated to some extent from the tariff-related concerns. And so there will be a buying stepping in there. Now, what's happening here is why they are also still correcting is because, see, domestic fund managers are the ones who have to support the market, right? But what's happened is that since April, May, June, I think they have put in 60,000 crores in the month of May, in the month of June, and the month of July. So you look at it, 2 lakh crores has been deployed by DIIs from April, May, June, July. So to some extent, I saw that the mutual fund cash balances, which have spiked up to 7.5%, has come down to around the 5%. What I'm saying is there is still some cash they can deploy, but a lot of it has already been deployed. So today, because of the FIS selling, if fund managers want to buy, even yesterday you saw there was 5,000 crores of FIS selling and 5,000 crores of domestic buying, but still the markets were under some pressure. So the point is that domestic fund managers have a less room to go and buy whatever they are positive about. They can only buy that which the FIs are selling. That's the second point. The third point is that they're also being a bit smart and waiting for some correction to happen before buying what they want to buy anyway, but not stepping in today because they know that there is pressure from the tariff-related FI front. So they're just waiting it out. So the volatility will continue, but ultimately, domestic fund managers will step in and buy domestic-oriented sectors where consumption is obviously top of the line, but I also draw attention to capital goods.
That's
because
right.
you saw the electricity numbers indicating that this, and if your consumption improves at the bottom, like two-wheelers, then capacity utilization will go up. Because so far it's been K-shaped consumption, and that doesn't help the numbers. It has only helped the value. But
Correct. Sunil, I hear you there, and a little more we will talk on the same as well with you. But Rajesh, one more sector which I would like to discuss with you. Pharmaceutical space was doing really well since last 2 weeks, and then came up the news, Donald Trump again. He demanded drug companies slash US price to blow to industries. Trump did escalate his campaign to pressure pharmaceutical companies to lower drug prices to the extent that he was sending letters to 17 of the world's largest drug makers demanding they charge the US what other countries pay for new medicines. Now, on the back of this, there was an impact in domestic pharma companies as well. We were waiting for an opportunity to enter in the pharma space. Does this feel like an opportunity, and should the view be to enter the pharma space if we get an opportunity like this?
So I think in today's session, there is a sell-off in most of the pharma stocks. But still, if we analyze, like healthcare sector is still, holding the ground at higher levels. So I think if anyone wants to bet on at this current juncture, I think healthcare would be the right bet in the pharma as well as in the healthcare space. So I think stock like Fortis, Max Healthcare, Medanta, these all stocks are looking attractive. But the pharma front, I think one should wait because still there is no clarity on tariff front from this and what kind of impact and would be there in the companies going forward. So I think maybe some profit taking would be there in pharma space, and some of the stocks from the pharma like Sun Pharma, Dr. Reddy, even Arvindo Pharma, all these stocks has broken their near term support area. Though a long-term trajectory is still intact, but on the near-term chart, there is a weakness in even the Nifty Pharma index is now trading just below to the 50-day moving average also. So I think maybe we could see some more, profit taking in pharma space in the coming days till this uncertainty is there. So I think some more downside would be there. So wait in the pharma space at this juncture to buy. But yes, those who are looking for opportunity for long-term perspective, they can use this decline as a buying opportunity, but not at the current level. Wait for some stability in the stock prices, then one can look to buy stocks. Divi's Lab is our preferred choice. So I think and Glenmark, Divi's Lab, these two stocks are looking attractive. Laurus Lab is also looking attractive. So I think these 3-4 stocks are looking attractive on the long term as well as on the medium term chart. But healthcare is a space where one can, try to buy the stocks like Fortis, Max Health,
Right.
and Medanta. These three stocks are preferred choice from the healthcare space.
All right, so a couple of stocks from the pharma basket as well as the healthcare space. Now, with that, it's time for a quick breather, but we'll be back. Well, the stock of the day, in fact, for the week that was completely hammered in trade was PNB Housing. Down more than 17.5%. Look at the sharp slide that we're seeing this week. In fact, for the week, it was down more than 19.5%. Now, this comes on the back of the fact that the MD and CEO, Girish Kousgi, has resigned, and the resignation will come into effect from in October. In fact, from the 20th of October is when it comes into effect. But PNB has full faith in the company of not selling stake. That's the word that is coming in from Ashok Chandra, who's the MD and CEO of Punjab National Bank. Let's go across and listen into what he had to say.
Resignation is what he has submitted, and he has suggested that because of his family reasons, he wanted to settle in Bangalore. And that is the reason he has put up this paper. I don't think any other things to be read under this now. The company will have the succession planning. See, one thing we must understand that this is an independent company, a listed company, run by the independent directors, and very renowned the board of directors are there on this particular company. So we are not selling our stake in this particular company.
Okay, so that was the news that was doing rounds during the week, in fact, and yes, the stock also did see downtrends, major downtrends on the back of the news, of course. Moving ahead and again coming to the tariff implications, and Sunil, one more sector which did feel the heat because of the tariff announcements was the textile space. Now, India is the fourth largest exporter of textile and apparel to the world. How significant is the potential impact of Trump's tariff move on Indian textile exporters' global competitiveness? What's your brief view on it?
My brief view, first of all, is that today it's a knee-jerk reaction, right? It's specific because relative to competition like Bangladesh and whoever is in that segment, we seem to be having an adverse tariff. But why do I feel it's overdone? Quickly, because as an interim deal is signed, this will be top of the table that India will want at least a level playing field with our other competitors in the textile field. So I think that today it's about 5 to 7% more tariff for us, right? So I think that that is where we will target to be, at least on that front, which I think that we will succeed. That's number one. Number two is that the government does have in its hands one more tool to use, which is currency depreciation to make up for the difference. So if we allow a rupee to weaken a bit, we can be competing. The third is this is a good trigger for productivity improvements, including some mechanization in the textile sector. And I think India, being the fourth largest there, we have the ability to do that. So we will come out of this crisis very quickly. So I would say that for a person who is willing to take a little more volatility and uncertainty around that sector, it's a good time to start accumulating that sector, because historically it's been a strong sector for us and we will come out winners. Yes, in the short term there will be volatility, but like I want to use a Hindi word, dar ke aage jeet hai. Definitely in textiles, we'll not give up our leadership position. The government will definitely do its best efforts to sustain that.
Right, point taken. But let me come to you, Rajesh. Now it is that time of the show where we get your picks from you. So what are your calls?
So Ankita, one is on the buy side and one on the sell side. On the buy side, Jindal Stainless is looking attractive. Stock is comfortably holding above all its near-term, short-term moving averages, and the way stock has shown, buying action in last couple of days, it clearly shows that stock is poised for giving a breakout on the near-term chart, and possible target towards 735 we could see in the near-term to short-term perspective. So Jindal Stainless one can buy with stop loss of 692. On the short side, Adani Enterprises has broken its important support area on the daily as well as on the weekly time frame. So looking at the structure, short built up is there in the Adani Enterprises, and we believe that furthermore supply pressure we could see in the coming days. So possible down move can extend towards 2285 to 2270. So one can go short in Adani Enterprise future with stop loss of 2375.
One sell strategy and one buy call coming from Rajesh Paravia Jain. Rajesh and Sunil, thank you so much for joining with us and helping us navigate through the markets and strategize the markets for the coming week. Moving ahead, irrespective of global concerns, investors must keep faith in the upside potential of Indian markets, says Envision Capital's Nilesh Shah. He adds that it remains a buy on dips market. Let's listen in.
I clearly think that from a medium to long term perspective, I think investors ought to keep the faith, ought to keep the confidence on the upside potential that India as an economy and corporate India has to offer. So clearly, I think one should look at this as basically a buy on dips opportunity. I clearly believe that a fair bit of the time-wise consolidation has happened. We could probably continue to be in kind of a range-bound market for maybe another few more months or so. But that's about it. I clearly believe that this is really the kind of time to kind of step in out there and continue to buy into high quality names. So I clearly think market has offered an opportunity. It is continuing to offer an opportunity, and maybe this opportunity time window could probably still be there for another few more weeks or few more months. But clearly, I think the outlook from a 12-month perspective or from a 2 to 3 year perspective is continues to be very, very strong, continues to be very, very robust.
All right, with that, it's curtains down on this edition of Your Trades. Mansi and I will take your leave. Thank you so much for tuning in. Happy weekend to all.